Today, I want to show you how I use breadth in order to help figure out the tops and the bottoms of the market and when we need to know that we can load up on this or we actually need to start pulling back and start lightening our load because maybe the market's at a top area. Hey traders, TG Watkins here, and today I want to show you how I use breadth in order to help figure out the tops and the bottoms of the market and when we need to know that we can load up on this or we actually need to start pulling back and start lightening our load because maybe the market's at a top area. So let me dive into this, show you how this works, and you guys can actually see this and start implementing it right now for your own trades. What I want to show you first is the big picture. This is one of the ones that I took here. Looking at, this is something I took from my class, one of my Moxie classes that we now have in the room, so if you guys are interested. And breadth is basically telling you how many stocks are above a certain moving average. So in this case, you have the 50-day SMA breadth. This is the number of stocks over the 50-day SMA. In this particular one, since the ticker symbol is this, it's a bit of a mouthful, I know, but that is how many stocks are over the 50-day SMA in the SPX. There are other ones for small caps, mid caps, whatever, but this one gives you a pretty good idea of kind of generally what's going on with the overall market. And a couple major things to note. You can't see it here, but basically I have marks at about 80%. And then about 30% and 20%, okay? Because those are what I find to be really important as far as you just go back and you look at this thing. When you start getting all the stocks in the S&P 500, over 80% of them or more are over their 50-day SMA, you're kind of getting to a point where most stocks are up and there isn't anywhere else for them to go to the upside because everything is already up. And so it's a way to understand that the market is obviously doing great, but it's getting a little bit too much and might top out and start looking for a pullback. In some crazier situations, we've gotten, I think this was, back in COVID area, everything was just booming like crazy, wasn't it? I've seen this thing go up to about 90 something percent, a little over 90%. That was definitely the top of a market run. And you can see here, that is when things pull back. Now, it doesn't necessarily mean that the market's topped out and we're going to get a crash and burn, we're going into bear market. No, it just means that this is the end of a really big move and that we should expect a larger pullback from there. So you can kind of see here, again, when it gets over that 80% range into 85, 90%, we start getting into some weakness because everything is already up. So you need to start being aware of that and realizing that could be a market change. Something's changing and that you don't want to just keep pressing to the long side. Well, because everything's already up. In fact, this is probably one of the more critical times to be aware of what's going on with the market, because when you have these many stocks over their 50-day SMAs and you keep, we're probably riding a really good time. I mean, everything's doing great, everything's up, but that's when you need to be careful because that's about when a pullback occurs. And when we get into more tumultuous times, like when the market has rebounded off the lows, you can see here we get up to about 80%, and then that was the top of that move. Or down here, you get a little over 85%, same thing, top of the move, top of the range, okay? So this is a pretty consistent indicator, what I like to use, and that shows you a lot for when the things are going to be kind of topping out to the upside. And it also works for the low side. Now the low side, we can find turns and there can be things like this, somewhere in the 30, 40%, there can always be pullbacks, along the way. But what I find really interesting, this is kind of one of those things where, back up the truck or load the boat, or, this is the time to really step into it. And this is where, Buffett talks about, when there's blood in the streets, that's when we need to come in and buy. When people are most fearful, that's when you get the best deals. And that's actually when the market's about to turn around. But how do you know when that is? Well, using something like the 50-day SMA breadth, when it gets down to extreme levels, and extreme levels are like 10%, 5%, something, that's pretty extreme. So you only have 5 or 10% of stocks above their 50-day SMA. Wow, that's really, really low. You can see here down, I think that was around COVID time. It got down to 2%. Obviously that was really low in some exceptions. And then you get down here, and this was the bear market lows of 2022. And you can see the same thing. They got down to about 5, 10%, really pretty low. And then just before, this one's a little bit older, but you can see this was in, I think it was December of 2024. You can see that also got down to about 20%. And that was the bottom, and then we bounced. And then even over here, you can see there were dips along the way. I think that was October of 2023. Yeah, after about 3 months of the market being down, what did we get? We finally got into about 10% range, and that was where the market bottomed. So really, really interesting stuff. And what I can do is I take you to where we are currently. Because if you look here, this was another very fascinating thing that helped me know that the bottom was in, and this is how we really nailed some moves in the market before any kind of Trump tariff announcements or anything else like this. This was a technical situation that I could look at through the market, the lens of using breadth, and say, I think this is about the low. And you can see here, where do we go? I think it got about 4 or 5% of stocks were above their 50-day SMA. So a very, very tiny number. So it was very extreme to the downside. And that's where we were able to get in. And we started making a bunch of trades in through here. In fact, we made a trade in through here, which was down here. And then we cashed out some up here because it hit the 21. And then we started adding more back here. And now we're going back up again. So yeah, that is what I'm looking at. Now let's actually, I can show you, this is what we did. So here's an example of why I took some of these trades off, is because if I switch gears and I show you now the 20-day SMA breadth, so the number of stocks over their 20-day SMA, this is the reason I started taking these things off, is because, and you can look here, so look at the second and the second here, we started to cash in 265% gain on our SPX Butterfly, a fantastic trade. We cashed in 27% gain on our BitX trade. And we cashed in, it depends on where you took the entry, either 15% or 68% on our FNGA, FNGB trade, and we took profits on that. And the reason I did that is because if you look over here, and you can see this alert, and this was on the 1st, so 1 day prior, and I said 20-day SMA breadth is at 78%. I said typically that is a level where we start seeing near-term exhaustion and a mild pullback. Now remember, that was on the 1st. And if we look to where we are right now, you come over here, there was the 2nd. So I started putting that alert out right here, and then we started taking profits right there. And you can see here now on Monday, so the 5th and the 6th, Monday, Tuesday, the market's been down. Fantastic, huh? And so if I kind of show you over here and you look at this, let me kind of zoom in a little bit, because this is where I go for 20-day SMA breadth, and you can see it right here. And it's the same idea, same concept as the 50-day. When you have 80, 85, 90% of stocks over their 20-day SMA, everything is already up. It's hard for the market to keep going because everything's already up and everyone's already longed up and there's just nobody left to buy because everything's already having a great time. And you can see this, that's exactly what we had here. We've had a really, really great move in the market. And you can see that here, I can't quite get the percentage, but it came out to 85 or 86% from what I saw at the peak, which was on Friday. And that is why we started to cash in some of our positions, because I knew based on these readings that this was a near-term top. It was likely to see a pullback. Now, the difference between the 20-day and the 50-day, as far as reaching 85%, is that the 20-day, hey, it's a smaller number, it's a small moving average, it's a smaller barrier, basically. And so when the 20-day starts to get extended, you just need to understand that there's likely to be some pullback. Doesn't mean it's the end of the move. I mean, it might be, but usually it just kind of means we are in a good trend. But everything's a little extended right now, and we could use a little bit of a pullback. And you can see that's exactly what we've gotten over the last 2 days. Now, it might go a little bit further. We're not sure, but it just means don't keep pressing it. And that's kind of what we saw Friday market. Was jumping up Thursday, Friday. And if you don't know about these things, then you're going to keep getting long. You're going to keep thinking the market's doing great. Your positions are doing great. But you need to be aware, it's so great. We should actually start expecting some sort of pullback. And so that's how I'm able to use and read the 20-day. And the same thing is on the low side. You can see that we got down to, I think it was about 2%, maybe even 0, but we got down to 1-2% of stocks over their 20-day SMA. And look what it was. That was the low of the market. Even back here when it was December, you can see here it got down to, I think it was 5, maybe 8%, and you can see that was the low. Even back here, a little bit of a dip. What did it do? Came down to about 10%. So this is a great way to be able to tell when you have the ebbs and the flows of the market, to know when to press it on the long side or when to start backing off. And as I said, this was the reason on Friday with those alerts that I sent out to the Moxie room. I said, hey, We need to cash these in because I think the market's topped out for now. We should expect a pullback, and that's exactly what we're getting. And now I think we've got more room to the upside. We're gonna have to see. We've got some economic data, and we're just in a very turbulent market right now. But basically, with the 50-day SMA Breadth indicator only at 50%, we could honestly go either way. The market is neither overbought, big picture, nor is it oversold, big picture. We are right in the middle. So all we need is the 20-day to kind of back off a little bit, gives a little bit of room. And if the market wanted to, it could go higher because this is not overdone. Okay. However, if this is a longer term top of the market, we could see this thing back off, and we could see the 50-day back off, and we're just going to have to see where the market goes from there. But this is how I'm able to figure out when we need to load up versus when we need to start exiting and be prepared for some more weakness in this market. And it's been working out really, really well for us. So I hope you guys see this. I hope it makes sense to you. If you guys have any questions, remember to come over to simplertrading.com/Moxie. That's where you can come over. You can see all these alerts that I do. Right in here, all the trades that we take. And this is how you can figure it out, because you can see here on the second, putting my money where my mouth is and telling you guys actually what we do inside of the room. These are real alerts, and this is how I communicate to my subscribers that are in the Moxie room. And we've been, as I said, we've been just, FNGA, FNGB, it's been changing tickers, but we've been doing really, really well from that. We are up 68% from our original entry back on the 9th. And so we've been trading Bitcoin. Not quite Bitcoin miners yet. They're still kind of struggling a little bit. Obviously, MSTR is a little bit different situation. And then we've been trading SPX trades, and we've got a bunch of other trades on right now as well. So we're just kind of waiting for some more news to kind of hit the wires. And then I want to see if this market can go a little bit higher, because hopefully we can put some of the tariff stuff behind us. But you know what? Even through all this news and even through the chaos, we can use things like breadth to help us figure out when the market is too high, when the market's too low, and we can capitalize on that. Okay. So remember, guys, come over to simplertrading.com/Moxie. Would love to see you in the trading room. And when you do, make sure you say hi, that you're new, and that we can help guide you into the right trades and the right positions. Okay, guys? So thanks again, and we'll see you at the next one. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.